Good afternoon, everybody. I'm going to be doing another video today. I'm going to be reviewing Dollar General with my wonderful beverage. I am over the age of 21, just to be clear, but I'll be reviewing Dollar General, go through the financials, checklist, and going. Yes, that's it. Let's get into it. All right, so going over Dollar General today, we're going to get right into it. So starting off, cost capital is solid. Target price above, fantastic. Long-term growth rate is actually negative for them. Now, I'm not sure why this is, but I mean, that is definitely a negative sign. Now, it could change in the future, but for now, it's negative. Um, but anyway, that's everything for the snapshot. Let's go into the income statement. So first up is sales. Looks like we've got solid growth. Even 2021, pretty good, pretty solid. Good there. Operating income. Now this is where there could be some worry. So you could see their operating income actually had a multiple year low. Now their sales are increasing, but they're not turning it into very much profitable growth. So operating income has been going down. Net income also, again, they haven't seen a record high profit in, well, it looks like just since 2021. So that's a zero there. EPS, let's see, growing, not especially. Looks like they just took a dip this year. One thing with EPS is that I don't even know the word for it. It's not necessarily like the end of the world. So honestly, considering it was growing for the most part, and I'm going to give the 0.5 there only because it's not the most important thing. That's why I only have it weighted at 3%. Total shares, I was just looking at it. It looks like they're going down 240, 250 a couple years ago, 219 now. So that's great. Let's go into the balance sheet. Cash, I want to see some increases. So it looks like long term, yes. I'm assuming they took out, most likely took out a bunch of debt or sold equity in 2021. That's why there's so much there. But in terms of the outliers, it looks like their cash is relatively going up. Now, one thing I don't like, which I just noticed, let's see, assets are increasing. Yep, that's good. Short-term debt should be coverable by cash. They have a lot of short-term debt, and that's not including their accounts payable. This is just short-term debt. Their cash, 500 million, short-term debt, 2 billion. That is not great. Now, with short-term, long-term debt overall, we want to see it decreasing. Their long-term debt, it looks like they put a bit of a dent into it in the past year, but not necessarily with the short-term. Really does not look great for that. And then retained earnings, positive, looks pretty decent. We'll give them that one. All right, let's get into the cash flow. Operating, if it'll load for me here, please. So what we want to see is operating cash flows growing and positive, which honestly they are. I mean, especially, well, this is an estimate, so that is not the one thing we really want to see. But it did take a dip, but they're not necessarily negative. And I mean, they have been growing long term. I think I'm going to go with a 0.5 for this because 2 years ago it was much more, but they're still positive, which is half the battle with operating cash flow. Investing is negative. That's pretty good. Yeah, that is good. Let me fill that in. Financing cash flow, want to see negative. So dividends paid is their biggest, most consistent thing, which is good. Changing capital stock, okay. Issue reduction of debt. All right, so all in all, financing activities being negative, good. Free cash flow, positive, growing. It honestly, past 2 years, it's dipped down from where it used to be, but it being positive is not bad. So I'll do the 0.5 here too. Okay, and then we have the use of cash statement. Let's see how this looks. Repayment of debt, negative, should be larger than the issuance, which, I mean, not really. They have been issuing a lot of debt in the past couple of years. Now, this year it outpaced, but again, that's probably going to be another 0.5. Repurchase of stock, want to see that negative and growing if possible. So I don't know if this is not including all of 2024 yet, or if they didn't repurchase any stock this year, which would make sense because their stock has been, the stock price has been going down a lot in the past year or two. That's actually why I have it. It's more of a technical kind of side of it instead of the necessarily fundamental, which you'll see on their final score here. It is not the greatest, but in terms of what I could see, they have been repurchasing a ton of stock, so I am going to give them that point. And then let's go into the ratios. So net margin probably isn't going to look fantastic here if I had to guess. It is positive, which is good. It has been going down though over the past few years, and it's actually at the lowest it's been in a while. So what I'm going to do here is I am going to do the 0.5, which you may not agree with, but I do not care. Assets, equity, they look okay. They're not necessarily increasing, but again, with those, it's more of a consistency thing rather than a consistent growth thing. So, yeah. Okay, yeah, I'm going to give the full point for that because consistently positive is solid. And then I just want to see long-term debt and total equity. I want to see that decreasing, which over the past year it did, but it looks like it's been increasing for quite a while now, which isn't the greatest thing. Went up a lot in the past 2, 3 years, 4 years. I mean, it's quadrupled or more. So probably going to be a 0 for that one too. It has gone down in the past. I might do a 0.5 just because they reduced it in the past year. Yeah, you know what? I'll do the 0.5. I'll do the 0.5. They deserve it. So overall, Dollar General, in terms of a financial standpoint, not the greatest. What I will say is that if you look at their stock chart, which I guess I could bring up really quick if I just go to my files here. Beep. So here is the chart right here. I'm going to actually just zoom all the way out to the weekly. So Dollar General, I would say, other than their debt situation, which does bring them down in a lot of different places, solid, consistent company. I mean, everybody has a Dollar General somewhere near them. So the fact that their stock price is this low, just in a technical standpoint, I feel like it has to, at least in the next few months, maybe a year or two, go back up to like 100, 120 range. So just in that area, I believe it's a good investment with how cheap it has become. I mean, their all-time high was 260, and since then, not too much has changed in the company. They've expanded, their sales have increased, things like that. So all in all, I think they just have to cut costs, reduce debt, and it'll not in a couple, it'll probably be 5 years plus before it sees all-time highs again, but overall it should be increasing in the short term. So anyway, that is everything, I believe. So 14 out of 22, not the greatest, score of 58. We'll go over here and put it in 58.0, and that is 11.2. So overall, not the greatest company from a financial standpoint, but I think medium term, good investment. I don't know if I'll be holding it for like a full year or not, but I may. We'll see. I'll probably re-review this maybe in a couple months or so, another quarter or two, see how it's going. But I could also go into something like the quarters and try to see if like their net margin has been increasing over the quarters, which honestly, no, it hasn't. So that's not fantastic. And then like total debt to equity has been decreasing 2, 3, 4 quarters in a row, 5, 6, 7 quarters in a row. Their long-term debt to total equity has been decreasing. So honestly, I could even give, I'm going to give that a 1 now. We're going to change it 14.5, 59.5. So they almost got a passing grade. And again, I don't really have a specific number that I would like to see in terms of deciding if me personally would want to buy it. I'm not telling anybody to buy it, but compared to like what I've already done, Celsius and Lululemon, it doesn't really meet the standards as much, but it's still in the portfolio just because of what I was saying about the stock price being so low. I just think it's an interesting thing to look into. So anyway, that is it for today. I hope you got some information out of this, and I'll see you next time.